Okay, let's go ahead and get into the stock market technical analysis. Guys, today we have the Fed coming out. We obviously had some of these large cap tech stocks report earnings. So we'll go through all of that. If you guys are finding value in the content, drop me a thumbs up. And if you're interested in getting some additional trade ideas, additional market commentary, feel free to join the private member group. Link in the description below of this video. All right, guys. The Fed's coming out today. It's mostly priced in that they're pretty much going to do nothing, not going to hike, not going to cut. And it really comes down to what they say about the March cuts. That's really what the market's looking for is, as of right now, I think it's priced about 50-50 that we're going to get cuts in March. And so the market will be looking for signs of that. So we'll keep an eye on that. But in general, I don't think the Fed's really going to move the needle today. But, because here's the thing, even if the Fed comes out and says some stuff, we still have Apple earnings and some of these other large cap tech earnings tomorrow after the close. So I suspect it's going to be pretty whippy and choppy, but ultimately do nothing because the market's going to want to see how the rest of these Mag 7 stocks report. And especially after the close on Thursday, you got a big group of those. Okay, so we'll look at that. Now on triple Qs, we'll start off with tech stocks. I've got an uptrend line right here. We're looking at the daily chart, support, and we're kind of coming close. Not quite there. We could trade down to that trend line, but close enough. I think we got an hour to go before the Fed, so we'll see. The other thing that you really want to take note of is we do have negative divergence. There it is on the daily just recently. And this is also just extending. This divergence really has been in play going all the way back to about June of 2023, where each new high in price has kind of been a lower high in momentum. All right. And that continues. So we're extending that divergence. So it's a pretty well-established, pretty extended negative divergence that's indicating a relatively large trend change and a new trend essentially to the downside. Although we don't have sell signals yet on, we don't really have sell signals, and I don't think we'll get sell signals till likely in the broad market till after, probably next week, essentially, because of those large cap tech stocks where the market's going to just kind of probably want to wait and see what's going on there. So we'll keep an eye on that. The next sell signal on triple Qs, from my perspective, comes on a break of this trend line here. And then the most recent highs are right here. This is your former highs. It's about 406-ish, somewhere right in there. A break back below that would be another sell signal because ultimately it would signal that the price action, the breakout that we've seen to new highs, that's got everybody all jazzed up. Oh, the triple Qs is at new highs and everything. A break back below that would signal that this is a false breakout. Okay, so those are the two sell signals. One on the uptrend line, next on the former highs that I'd be looking for. Also, look at the PPO. If I zoom in, here's the PPO. Then again, there's your negative divergence, and you can see it looks like we're going to get that bearish crossover right there to help confirm that divergence. So we don't have it yet, but a little more downside, and we should have that confirmation, just helping confirm that this is a divergent high, and there's a very high likelihood that it's going to fail. So that's triple Qs. Let's look at these FANG stocks. The one, Google, obviously getting smoked down almost 7% today. Gapping down. This one, obviously it had a divergence that was extended. You can see here clear divergence on the PPO. Look at that. You have just a lower high, and basically we've been diverging. Mostly all of this price action has been diverging on the PPO. The RSI, even the RSI recently made kind of an equal high. Right there, right into earnings. And so, yes, negative divergence intact. Earnings come out, big gap down, trapping in some long money. We have some support down here, so we probably need to see that get taken out for the next sell signal. So I suspect Google's probably could go down a little more, but I suspect they'll probably try to hold it right around this area, possibly bounce it a little bit. and wait until the other large cap tech stocks report before kind of making a resolution move. So that is it on Google. Microsoft's interesting to me. Microsoft, again, if you really look and you just kind of break it down into the technicals, you have negative divergence. All right, there's your pretty much equal high on the RSI, and the PPO clearly a lower high. So you've got a high in price, a higher high in price. You have a high in momentum. This RSI was like an equal high, and the PPO was a high and a lower high. So negative divergence, that means momentum is moving lower while price is moving higher, signaling a high probability of a trend reversal. The conditions are there essentially for a trend reversal. We need a sell signal. It's looking to me like there's a potential short-term sell signal today. So on Microsoft, if I have to break it down to the hourly to show you the trend line, but one thing on the daily chart, this candle right here, Microsoft reported after the close yesterday, this candle here is a bearish engulfing and an outside day. So if I go down to the hourly, you can see the first hour, they moved it up a little but sold right into it, and that's a bearish engulfing candle and also an outside day. So that's a reversal candlestick. Now the day's not over and the Fed's in an hour, so a lot can change. So I don't want to, say that this has to be a reversal candlestick today because the day's not over. So keep an eye on that. But if that is intact, then let's drop back down to the hourly. You've got, what looks to be kind of like this basically. You've got this hourly trend line here. They were kind of marching up it, and that would be your sell signal basically right there. All right, so we'll see how the Fed, what they do and how the market reacts to what the Fed says. But that's a bearish engulfing as of right now, and that would be a reversal. And that would, to me, that tells me, if I roll out, I've got kind of this longer term support line right there. So I think we come down to that, down to here, 377, probably get a little bounce, and then ultimately probably going to break, but it's getting way ahead. Meta's in an uptrend on the daily chart. You've got support, lots of reactions there for at least. So no sell signal there. Clear uptrend line on Meta. But, same picture. Negative divergence has just been extending and extending and extending. So it could continue to extend. Nothing says that can't happen. And it has not reported earnings. That comes on Thursday after the close. So yeah, that's it. This can continue to extend until it doesn't, but the conditions are there for a trend reversal, and we're coming into earnings. So if I had to guess, the earnings are going to be negative. Or it's just what the market does. The earnings might come out, they might be earnings, but the market says, okay, they didn't, it's priced in that they beat, and now we want to take profit, and, it sells. All in all, it looks to me like the technicals are telling me that this thing's going to sell off after earnings. Doesn't have to be right after the report, after the bell, might be the next couple days after that. Amazon, all right. Amazon clearly has that negative divergence intact, all right. There it is, extending, extending, extending. We have a short-term support line here, support, and we're pretty much sitting on it right now. So sell signal on Amazon comes on a break of this trend line. All right, if you break, you're likely heading down to about 144-ish, 143.80. We've got some support right in there. You can see it right through there. There's another reaction. So that's support. And then you have a larger term uptrend line down below, support, support, support. So again, here's how I think it goes. You break, all right, you come down, you bounce at that 144-ish, get a little bounce, come down to the major trend line, get a bounce, probably chop around for a little bit, and then ultimately break. So each time we break, if that's how it goes, each time we break those support lines, that's a sell signal, all right? And a major sell signal right on the break of this big trend line down here. Apple, all right, so Apple, selling off ahead of earnings. They rallied it up, but they've been selling it, nonstop selling right ahead of earnings. coming into, kind of some support right here. So it could go either way right after earnings, which are coming out on Thursday after the bell. The 200 days just below. So this one's, to me, in no man's land. It's not really a very clear picture. They could bounce it into earnings, then sell it. They could sell it and then bounce it. This one's, again, kind of not super clear. So we'll have to just wait and see. Looks like we have a trend line from here. There we go. So I can clean this chart up and kind of get rid of some of these other trend lines that we don't need anymore. But here's the trend line coming off of this is the rally that we've been in since January of 2023, so over a year. And you've got, so there's the start of it, there's a reaction, there's a third reaction. So again, a break of that trend line is the sell signal. All right, and the 200 days just below. So again, if they, let's say they gap this thing down on earnings and it closes below there, that's the sell signal. That's a big sell signal in Apple. You get that sell signal in Apple, that's going to put a lot of pressure on just all the tech stocks. So keep an eye out for that. Otherwise, we're close to support. They might, they could bounce it. All right, until you get the breakdown, there is no sell signal. And the divergence, the last negative divergence was right here. All right, you can see momentum moving lower. We have not made a new high, so since that divergence, there's your divergent high. There's a move down. So again, if they want to rally this up and put in a new high, they could. All right, and if that happens in Apple, then then the triple Qs is likely going to hold up as well. Nvidia. So Nvidia, really, you have a short term. Nvidia kind of went parabolic right here, and I think it's starting to stall out, but it's likely going to just hold up until you get some sort of a gap down on earnings or some sort of a move. So, because there's a lot of momentum in Nvidia. It's a kind of a mania stock. I know that a lot of retail people are long this thing, and they'll be long until it kind of takes them out on the downside. So they're not going to sell while there's bullish momentum. They'll sell only on the bearish momentum. And so that's just how that goes. Support on Nvidia, good support down here about 504, and then also you have the big trend line that really started this rally back in October of 2022. Support. There's another reaction. There's a third reaction. So again, that trend line is the major sell signal. Okay, when you see that break, that would be a major sell signal. And Nvidia does have negative divergence that's just been extending. All right, so again, I favor the break of that trend line in the future. I think we probably can come down to it. The bulls will be there trying to hold it up. You're guaranteed to have at least a reaction at that trend line. I mean, it's very high probability you're going to get a reaction there. So I think you come down. The next move in Nvidia, I think we come down. Okay, I think we hit the trend line. The bulls step in, and then it probably, makes it. They probably make it look like it's going to bounce, and then ultimately it fails. That's the way I'm leaning. So, and Tesla's already been sold off from the resistance line, the downtrend line that I pointed out. Tesla's already sold off. We don't really have a divergent low, so I think it's going to chop around a little bit more. It might put in a divergent low, but it's not shortable here. Again, I talked about that. You want to short at or near resistance up here. I don't want to short down here after it's come down. It's down 28%. So not looking to short that one. Again, I think it probably chops around, maybe puts in a divergent low. Then you could see a rally maybe. Okay. JPM, this one looks interesting to me. I'll just go through this. On JP Morgan, you've got negative divergence, very clean and obvious negative divergence on the daily chart. Again, and if I roll out, going back, the rally, right here started. You can see support. Lots of reactions there. Finally broke, but not very impulsive of a breakdown, but it was a breakdown. And then you rally just basically non-stop straight up to resistance. All right, resistance, and again today, resistance. So we have, that's another divergent high, a back test of resistance. That is an objective short right there at that resistance line with the negative divergence intact. It's objective to short at that key level. So I like that as a short. I did take a position in this one. So, and then the other thing, earnings is out of the way. They just reported earnings, I believe. Let me double check on that, actually. Oh, yeah. Earnings is out of the way. It was on January 12th, it looks like. Was that in January? Yeah, January 16th or right around there. Earnings is out of the way, and so we don't have to worry about that. The other thing is, so far today, that's a doji candle. They call that a what do they call that? A shooting star doji. There's different names, but in general, you have the price moved up and the seller stepped in, and we're seeing kind of a reversal candlestick. So what you'd want to look for when you get these dojis, provided that we close with the doji like that, what you want to look for is confirmation, so more selling the next day, preferably. They can hold it up, but just no more real buying. They can maybe just kind of hold it flat the next day, but ultimately you want to see downside from here. That would be confirmation. So if we see that, then again, I think this up move in JP Morgan is finished, and we're going to actually start a downtrend. I'd be looking for lower highs and lower lows. So looking for confirmation, and then and then I'm looking for that trend to basically reverse and start to make lower highs and lower lows. So that's that one. And then the other ones, Visa, not so much. It's we'll see how that closes the day. MasterCard reported earnings. They kind of look like they have that reversal doji as well. And this one, it's very similar to JP Morgan. You can see going back into October of 2022, you've got support. There's a reaction. There's a reaction. You broke support. And then, that looks like a back test. Now, it's not a full back test. My trend might be off, but it's close enough. So I could see that being, the end of the road for the MasterCard rally as well. Because we broke trend here, and we're back testing. So yeah, that's something to look for. This one, if I roll out and really look, the divergence on the RSI is close enough where we could say it is divergence. It is there on the PPO. It's just barely there. So, what I'd be looking for is if this doji holds up, then again, confirmation, more downside from here. Okay, doesn't have to be tomorrow, but I just wouldn't want to see too much upward price action from here. Okay, so they just hold it in the area, that's fine. And then ultimately in the coming days to weeks we see downside, that's confirmation. We should see a trend reversal in MasterCard. And while I'm on the theme of the financials, this one looks pretty decent, Capital One, for a short. Not yet, because there's no sell signal, but here's what I'm looking at. On the daily chart, you've got a downtrend line going all the way back to August of 2021. Okay, so you've got one reaction, two reactions, three reactions there. Okay, so that's your trend line, and we have a breakout. That is a breakout of that downtrend line. Okay, but here's the thing: the breakout came on negative divergence. All right, you've got clear divergent high, negative divergence, and breakouts that occur when you have this negative divergence have a high probability of actually failing, a much higher probability than they do, obviously. A breakout can always fail, but when you have divergence, it elevates the probability of a failure. So I put good odds that this breakout here fails. And the sell signal on this one comes when or if that breakout fails. So from my perspective, if we get back below this trend line, basically taking out the lows of this breakout candle right here, all right, we'll just call it taking out the lows, and if it happens soon, essentially about 132-ish, roughly in there, you start breaking down and taking out the lows of 132-ish, that would be a false breakout, and that would be your sell signal. We should see a pretty good size move to the downside if that happens. So these financials are starting to look a lot weaker after the most recent price action. And just real quick, the interest rates, 10-year treasury rates, they're down today. You can see we basically gapped down and have been selling down. Interest rates have been falling today, and yet when you go and look at the triple Qs, pretty high, pretty rate sensitive index, triple Qs, it's down as well. So that's a little interesting to see that the bond rates are coming down, and so is the stock market. So we'll see if that continues. That's just kind of, interesting that we're seeing that. That's, and that, the thing is, if we're going to get a recession, which I do think we will, that's what happens. You have interest rates falling typically in recession, and you have stocks falling as well. So that's something to keep an eye out for. I'm going to wrap it up there, guys. Drop me a thumbs up. Check out the private member group if interested. I'll catch you on the next one. Take care.